Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Optimum Bank. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Elliot Nunez, CFO, and Moshe Gubin, Chairman of the Board of Optimum Bank, which trades on NASDAQ under the symbol OPHC. Welcome, Elliot and Moshe.
Thank you, Cecilia, and thank you everybody for joining us today. Like Cecilia said, I'm Moshe Gubin, and the Chairman of the Board of Optimum Bank as we trade on the NASDAQ under the stock symbol OPHC, and I'm joined with me by my CFO, Elliot Nunez. To understand our company, our leadership team is comprised of myself as the Chairman of the Board, Tim Terry, who's our President of the bank and CEO, Elliot Nunez, who is our CFO, and Melissa Zurich, who is our Chief Credit Officer. Most of our leadership of our bank are long-term employees. They've been with us. For many years and have seen us through the transition of us being a bank under a consent order, regulatory enforcement action, and as small as $80 million bank, and have been with us through the change from that to an over $600 million bank on our way to $1 billion. And God willing, we'll all see this together with good profitability. Most of my people, we're a different bank than a lot of banks, where our bank, the board, the way the board is managed is where the board members are all business folks and the bankers are in the room. And what makes it what one of our strengths that we have is the ability for us to have checks and balances, that the business folks want to come up with business ideas and figure out how to make more money for our shareholders, and the bankers are making sure we're doing everything prudently and running business the right way. And that's been a major part of our success. To understand our bank, really, the history of our bank is, I came along. The bank started in 2000. It was started originally as an internet bank. We added a second branch in 2004, and then we added actually added two more branches: the Fort Lauderdale branch and the Deerfield branch. They changed the name. It was originally called OptimumBank.net, and they changed it to just be Optimum Bank. They started trading on the NASDAQ in 2006. You'll see the break in the timeline here between 2006 and 2020, and that's because that's really where the story takes off. Originally, this bank was bought as a wholesale bank. They would buy their loans and they would buy their deposits, and they would just make a spread between the two. And then when the crash happened in 2007, 2008, this bank was looking for recapitalization, and that's when I came into the story. I came in after the crash, about 2007, 2008. Like I said, I became the chairman in around 2010, and in that same period of time, from 2010 till today, our equity grew from less than $10 million to now we're over $70 million. This company has been ran as a corporate governance very, very well. In fact, I used it for my other company, which is under stock symbol STRW on the New York Stock Exchange. We used a lot what we learned there. We run very, very well, very, very clean. Our audits, all of our timing on all the reporting has been done effectively on time. And throughout these last 14 years that I've been chairman, or 13 years, we've changed its profile to become a white glove service to everyone, and not just a higher net worth customer. Somebody with $1 is treated the same way as someone with $10 million or more, and we treat them real well. During that period of time, from 2006, where I'll focus a little bit of time right now. So we basically, when the bank as a wholesale bank got in trouble because the marketplace, what ended up happening was we got put under a consent order. I joined the bank, didn't know what was going on, wasn't previously in banking. I invested myself $5 million, and I brought along a lot of different people that invested with me, all of them expecting me to watch their investment the way I would watch my own investment. I started coming down here regularly, and and during that period of time, I started trying to support the bank by bringing my friends and starting to use the bank as a regular bank. At the time, they weren't set up for that, and we ended up learning because of me being the first customer, like a regular transactional customer, how to change, how to be a customer service cultured bank where we want to take care of our clients. And so I always tell people when I meet them, like, this bank was built with me, taking me in mind as the customer, and therefore everyone's get treated real well. And we're very proud of that. We have a really good bank. Like I said, we've grown asset base, very well over the years. Just to go to the end of this slide, we closed one branch in Plantation, which the original branch that was open in 2000, and we're expecting in the next month or two to open up our new branch in North Miami Beach. We'll talk a little bit more about that a little bit later. Um, this slide, we continue to grow. We've grown from the last quarter from the total assets up to 633 million, which is an $11 million increase. As you can see, our loan to deposit ratio 94%, and with a $526 million loan portfolio. We continue to grow our loans monthly, about $20 million to $30 million. I think the last month just now we $31 million. And we continue to have no bad debt on our books. We'll talk about that a little bit later as well. In this quarter, our loan portfolio grew about $23 million. If you look at the slide here, the value proposition, right? We believe in community banking, and we believe that we've created a good franchise here with OptimumBank. All that being said, is our stock price is trading way too low. We are based in South Florida, where most of our lending is done. Our deposits come in from all over the world, but our lending, and we feel that prudent banking is, we're lending to our local communities where we know our borrowers, we know our marketplace, and the Florida market is, I think, doing better than most of the country. People are flocking here from all over the place, and you see it with a low unemployment. Recently, I was on a panel, and as understood by most of the people that were in attendance, they realized that Florida is a great place to be, and for us in the banking, everyone that comes down here needs a bank. Everyone, we don't really do residential lending, but for businesses that are down here, we're a one-stop solution for basically all of their needs. Our state has low unemployment. The housing market is booming, and people are still moving. I think it's slowing down, but they're still moving here in droves. Our core customer is a Floridian or Florida-based real estate company with a principal that lives here, as well as local depositors. But again, we take deposits from anywhere. We're one bank that we do not require people to come in person to open an account. Our customer base is incredibly loyal to us, has been with us for many years. They continue to refer their friends, both on the lending side as well as the deposit side. Interesting to note, like, really, so when I started coming down here in 2010, and I made the first batch of relationships, where before we didn't have like transaction accounts, like I said. So we are now already like a fifth or sixth generation of them referring somebody who then referred somebody else, who then referred somebody else. And meanwhile, we're still able to connect the dots when I meet a borrower or customer, and they're like, yeah, you banked this guy, and he told this guy, and for me, the geography, Jewish geography, or just the regular geography of knowing where my customers come from and how they're supportive of us, and we're supportive to them by supporting their local synagogues and schools and everything. It's a beautiful relationship, and that's why I think we're beating most of our peers. If you look at the last 5 years on these slides here, you see our growth, both in employee counts. You see we went from 19 to over 50 employees, and that continues to grow, albeit it's a smaller growth now as far as employees, because we're really at a point where now the more money we get out the door, it's minimal additional infrastructure that has to be built out to be able to service that. In fact, I believe our financial numbers that we are currently running are only going to continue to improve because we built out the infrastructure with a common sense approach, which is, we believe that if we want to do something, we got to build it out right. So let's say we went into the SBA department and we didn't just start off by saying, okay, let's just do it and then, and not do it right. We said, okay, we're going to bring in an underwriter that knows the business perfectly well. That'll make sure all the I's are dotted and T's are crossed, so that if there, God forbid, something that we have to put back to the SBA, that they're not going to get us for us, not doing a good job with the credit file. And the same thing with the lender. And so we built out these departments, and that goes across the board in our treasury management. It goes along with SBA, BSA, and other departments that we have, that we right now have the shoes that we could fill and bring in a bunch of business that'll bring top line revenue, and other than interest expense, not really increase our costs of our business. You see that in the middle graph here with the non-interest expense. So we're built out at this point, and so we're making the money that'll continue to increase returns. I believe in a pre-tax, pre-provision, our core right now, I think June month, just that one standalone month, I think we had like a 19% return on average equity, which is incredible. And on a run rate, I mean, if you annualize that 1 month and over 12 months, I think we're doing a lot better than our peers. In fact, I know we're doing a lot better. All the growth in assets, employees, and most important with the net income is what's going on here. Total assets, as you see, from 126 million to now we're at 606, almost 650 million. Our NIM, as you see, is continuously improving, and that's pretty simple story there. Is we slowed down on our lending, basically because we were holding firm on our pricing. Up until the erratic nature of the interest rates, we were at a pricing of a 1 year treasury plus like 3.25, and that was an aggressive number, and it was good, very good for us, and we maintained a good NIM. And once the interest rates became erratic, we switched to a SOFR plus model, and then we locked in the rate 5 days before closing, as opposed to locking in the rate when we sign a term sheet. And what that's done is, protect us, that we should be able to make a spread on our cost of funds. But what ended up happening, what continues to happen, is that, and we'll talk about it in a future slide, is our deposits and our relationships with our customers. The non-interest bearing deposits have grown. The interest bearing deposits have also grown, but to at a lower degree. And the cost of that money has gone up to be market, which blended at this point, every dollar at the door today, we're probably putting money out the door at a 5 or 6% spread, which keeps our total NIM, at 360, 370, and that's going to continue to grow because as we get payoffs at lower interest stuff that's decaying, where the new money going out the door is at the current pricing, and as we've seen yesterday, rates aren't dropping as fast as we were expecting them to start dropping, and so we'll see where that goes. But we do expect, God willing, with doing all this investor relations stuff and talking to our shareholders more on a regular basis, that we should get the stock price up. And once we get the stock price up, we could do an offering at some point. We could do an offering, and then we can have the capital we need to get to $1 billion. Otherwise, if the stock price doesn't go up, at some point, my partner and I will probably put the money in so we could get to the $1 billion. I don't want to. In every business that I'm involved in, we never want to slow down. We always want to be growing, because if you're not growing, you're dying. And I don't want to. And I'm not all about that. I'm all about growing and making money for everybody with me. If you look at our growth rates, I mean, I challenge anyone to find. I'm sure there's somebody that competes with us, but relatively few that compete with us with the growth rates that we have. Our gross loans from quarter to quarter grew 24 million from first quarter to now, and that 24 million obviously includes additions of new loans and decrease of loans that paid off or paid down. We continue to have no bad loans in our books, thankfully. We don't have anything really even on the past due list, except for our consumer lending, which we talked about in previous presentations. Under an accounting rule, we show under consumer lending program that we have, where our model builds in bad debt on consumer loans. On GAAP accounting, we're forced to show it as bad debt, but from true commercial lending, which is what we do, we don't have any bad debt at the end of the day. We're fully allowance, more allowance than our competitors or than our peers. I don't call him a competitor, and but we haven't had a write-off on a true write-off on any commercial loan, a portion of it, $1 in many, many years. Um, our total deposits grew $24 million. I mean, look at that growth rate of 62% growth rate or 58% growth rate on lending. I mean, that's a killer. I mean, we know we're doing a great job. The one negative is our stock price, and hopefully people will get the message and start supporting the stock and recognize the investment being a good investment. Our non-interest income continues to be a strong number, which we expect to grow in 2024 when we improve our technology and attract more customers using ACH and wires. We're moving along with that process really, really quickly, and hopefully 2024 will be our year that we like. Right now, we're just average when it comes to our technology. I want to be, at the top end of that spectrum on the technology side. Our yield on loans has increased better than our cost of money, and that's why our NIM has improved, like I mentioned earlier. And our real bright spot, which I'll talk about a little bit later as well, is our SBA lending, which is really taking off. I think in July, which is not in these numbers, I think we had a $60 or $70 million in $60 or $70,000 in fee income from SBA, which we expect that department to really be a strong increase. And again, the infrastructure is already built into our current expenses, and so we expect that department to really be great for us. Core deposit franchise, as previously said, our total deposits rose over $24 million in this quarter. Interesting to note is that out of our total deposits, non-interest-bearing deposits grew $55 million, and therefore that shrinks, the interest-bearing deposits in totality. So, right, if the total deposits went up 24, and out of the 24, 55 of it is non-interest, that means we dropped off, $30 million of interest bearing. The actual cost of the interest bearing went up like 9 bips or 7 bips. So, put all that together, that's why our NIM has improved. And it's our cost of deposits is blending out just fine. And like I said, the new money going out the door is at a good spread. And so we should continue, because of all that, we should continue to improve on our NIM and continue our profitability to even be stronger. Stated before, we continue with our loan pricing being at the SOFR pricing plus, and since we're doing well deposit gathering, our NIM is improving. We should be closer to a 4 NIM at some point soon. One thing to know is that we're still doing business as we have been doing it all along. That's one thing that I'd say, that we haven't changed anything. Our underwriting standards were pretty tight all along. People say to me that like we're really like an old style bank, where we lend off of relationship, but everything has to underwrite, obviously. And so we're doing business the way we've always done business, and the loan and deposit growth has literally been from word of mouth, with still $0 basically in advertising. Now we're starting to spend a little bit, but that's really mainly because of the stock price, not because of us trying to garner. We want new business, obviously, but that comes every day of the week. The phones are ringing without making too much effort. Our customers and borrowers are that happy with us that we're being referred daily, with our bank accounts and total loans growing rapidly in terms of total bank accounts and total loans. Not dollars wise, but total bank accounts and total actual loans. Credit trends, as I said last quarter, we still haven't had a real credit loss. I talked about it a little earlier. Similar to last quarter's comments, we account for bad debt on the consumer lending, which we talked about already. Our real bad debt number is 0. Our reserves are higher than our peers, while we have no real bad debt. And again, I'm super proud of that. We're relationship based, and because of that, right, it's harder for somebody to want to burn me when they come to me to help them on something, and we go and make it happen for them. Most folks are gonna have the integrity to make sure they take care of the people that took care of them. And I think that's true for life. Anyway, for this slide, loan detail. Again, we're a South Florida bank, which normally is, we're mostly CRE lender. so it's commercial real estate. We don't really do residential lending because of the regulations of the HMDA and everything else. But if we have a client that needs something, we'll refer to a residential lender, and then we'll buy the loan from them to take care of our customer. HELOCs have been a great product that we've been selling to borrowers the last year or so, and we built up a nice following in that arena as well. I mean, that's sticky money that that comes along with people moving their banking here, and then you sit down with them and you find where there's other needs, a letter of credit, some other product, and then we support them. And actually, that's a lot of moving when you meet with those customers. It seems to be that there's a lot of people that are needing SBA business, and then we forward them to Chris, who runs our SBA department. Our current unfunded loans, if funded, would add another $70 million at our loan portfolio at an average rate of prime plus a half. Like I said, we started an SBA department, really taken off. We closed our first two loans like I said earlier, but the first two loans that closed at an $85,000 fee income, and we have a really strong pipeline. I'd say that between the regular pipeline, SBA pipeline, and the SNF pipeline, which we've been closing a bunch of loans on the SNF side, which is skilled nursing facilities. We're doing AR lending for those that don't know what that is. We have over $100 million of loans in our pipeline today. And again, we're closing between $20 and $30 million a month. The next slide. This is really it's a slide that probably will get removed for the next time we do this. First quarter, with all the turmoil that was going on in regional banks, we added this slide so people would realize how strong we are. So we kept it in this for this presentation. This is probably the last time we see this. I mean, at the end of the day, if you look at this, and we have over $100 million of available liquidity, over $182 million of off-balance sheet liquidity. Our off-balance sheet liquidity grew, $13 million from quarter over quarter. We're super strong. Anyone that's still out there that's worried about the regional banks, and I'm not sure they should be. I guess I should pretend like they should be so that they move to us, and because we're totally strong. But reality is we're really a strong bank, and you could look at the slide and you could see it. Our going forward focus includes, like I said earlier, the technology improvements, which is a major deal. Bunch of customers that have come along to us that are loyal to us. They accept that we're average on the technology side, but as soon as we're able to improve on the technology, we know that we're going to get another $50 million of non-interest-bearing deposits. And so it's worth it for us. We're pushing hard so that we get there, and God willing, that'll happen in 2024. And the other thing we're working on is, besides for the North Miami Beach branch that's opening hopefully in the next couple months, we're hopefully working on a fourth branch that's going to be in downtown Miami, where we have a lot of followings. I mean, our following, like I said earlier, most of our borrowers, are along the 95, the interstate, and that goes all the way down from Homestead to, we go really all the way to the top of the state. But I mean, but majority is 3, 4, 5 counties that are down here, Lake Worth, all the way down to Miami, and so we feel that we should support them. I'm not a big fan of branches, but where there's a need and we can bring in deposits and we can support our customers, I'm certainly a fan of doing what I got to do to take care of our customers. We feel that our company is totally undervalued in the marketplace. I know that we're doing great. We look at, in the banking world, we snoop on our other banks, and when I look every quarter at how we did versus everybody else, I'm proud to say that we're doing great. I mean, we're killing everybody, and so we just need to get the stock price up. As you can see here, our loan growth, deposit growth we talked about, our stock values continue to increase. Unfortunately, the stock price continues to go down while our value of the stock is going up. Our EPS is getting better every quarter. I think last quarter was like 12, 13 cents, and now through half the year it's 34, which is more than double what it was. So we continue to do well there. And with that, I'll take questions. So we got a question here about our growth. So I would answer about our growth. The question is, you've grown considerably since 2019. Where do you see that growth continuing? So 2019, from earlier in the presentation, that's really where Oh, probably didn't say it at the time. I should have. So we got released from our consent order like at the end of 18, and once that happened, we were then able to take off. We didn't have anybody with the noose over our neck, and so we're then able to go and become who we are. And I can tell you today that our growth is going to continue because we're daily getting loan requests and deposits are flowing into our bank. Literally, without any effort to get it. I mean, we're doing a good job. Our effort is we take care of our customer, which is our philosophy. And so there's no reason why culturally we're going to stop taking care of our customer with white glove service, and there's no reason why we're going to stop taking care of the borrower's needs within our context of our pricing, which I think our pricing is going to go back down when the rates go down, to be back to the aggressive pricing that we should have demand. And with that being said, the third leg of the stool here is capital, and we are really strong in capital. It's not a slide here, but it probably should be. We're still 11% capital, which is good, but to get to where we've got to be, at some point we're going to have to do a capital raise. And um, like I said earlier, that capital raise is either going to happen to the public when our stock price is up, because I'm never gonna sell stock below book because I refuse to dilute anybody. Doesn't make any sense. We could just make a bunch of money and just not grow. I want to grow, and like I said earlier, and so to answer the question, we expect 2024 to continue uh, at a better profitability number because SBA is non-capital intensive. That's going to add to the bottom line. Once the technology comes in, it should further dilute our total deposits to be non-interest bearing, and then a lot of that transactional with the technology will bring in our non-interest fee income. That number should go up, also by a couple million. So if just between SBA and the technology, with the same costs, without growing our loan portfolio, should bring us. I think right now our run rate is really core profitability like 13 million. I would say that if everything hits the way it's supposed to hit on an annual number, 24 would probably start part of it, not all of it. Is our run rate should go from 13 million to probably 17, 18 million, maybe 19, something like that. And so that's where I see us going. Do I have an interest in M&A is the next question, and the answer, of course, is yes. The network that I provide and our board members provide, and our relationships with our current customer base, deposit base, and shareholders really push us to be in other markets like Chicago, Illinois, and New York City, where a lot of our customers are based in New York, a lot of our customers are based in Illinois, and mysteriously, I'm originally from New York and I lived in Chicago for a bunch of years, so you figure out how that works out. But yeah, if we could find deals, for banks that were willing to merge without taking advantage of them, doing book versus book deals, just bringing them under our fold, having synergies by cutting out some of the, duplicity of two, corporate structures. Um, I would do it all day long. We've had a lot of interest over the past of people that want to buy us, and we're not for sale. We're growing, and we're certainly into M&A if we can. I think the last question is whether we have any concerns on the lending in Florida. I think, like I said earlier, I mean, Florida is a great state to live in. I personally live here. The real estate markets, no one's expecting any crashes anytime soon. With the rest of the world going crazy, over here you still see the high demand, like I said, the low unemployment, um, and um, and we continue to see a lot of demand. And these are not like, we're not scraping the bottom of the deal bucket for us to find something that works. We're looking at vanilla deals, and we take care of our customers. And our customers know that they could go somewhere else, in theory, at this point today, because we're not that aggressive on pricing, and they could probably go somewhere else and find a half a point cheaper than what we are offering them, per se. But they come to us because they know we're going to take good care of them, and when times are good, we're good to them. When times are bad, we're still good to them, and that's been our philosophy. Take care of everybody. Um, Take care of everybody as if they were me and how I would want to be taken care of, and we just that's how we do business, and we continue to do business that way. So I want to thank everybody for joining us. I know, on a Thursday noontime, there's plenty of other places you could be. And so wish everybody that in the Jewish world a happy New Year and to a successful conclusion to Day of Atonement.